Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, ICE Brent crude oil futures. A bullish white Marobozo and third bullish white soldier yesterday after the previous session's indecisive spinning top. The market had recently been entangled amongst the July 21 low at 67.43 and the mauve medium moving average, currently 67.66, and I suppose also the short moving average, currently at 67.53. But yesterday broke free on the upside, pushing and closing over the green short medium moving average, currently 68.18, but getting capped at the congestion at 68.69. This green short medium moving average is very interesting, as it is the precursor to the previously well highlighted large congestion area overhead, which is starting now at 68.69 and stretching up to the 70.13 area. This is one of the number of overhead congestion areas, actually all stretch all the way up to 73.73. Looking further down, we still have the recent base of action, which is the well highlighted December 2021 low at 65.66, with further support from the broken, yet still refusing to die, dark blue upper time, currently at 66.01, of the showrunner for this market since last summer, the many times broken and many times repaired dark blue April to July 2024 bearish shift pitchfork. Now so far today, a slightly higher open, but then a reactionary move lower down below the green short medium moving average, though we're not stabilizing below it as yet. Spot gold, a third bullish white soldier yesterday and a follow on from the previous session's key reversal up with another new all-time high and high close. However, it seems to me to have been a reluctant move higher, as the interference from the 50% projected Fibonacci line at 37.03 slowed the pace of ascent significantly. This week has been a follow-on higher from the break up and out from what's been the possible halfway hesitation we saw last week, based around the 36.40 area. Plus, as I said yesterday, and it was, and I quote, hardly a surprise, as we've had the market last week reach up and achieve both primary and the harder to reach secondary targets. These targets for the break higher from the previously highlighted bright green rectangle pattern, currently 32.47 to 32.51, which I mentioned 5 weeks ago. End of quote. The question now is, as it has been for all of this week, what's next? What's next? And the recent indecision has been a symptom of that question. I've already noted the 50% projected Fibonacci line at 36.91, plus support below is somewhat tenuous support, and is down at the April high at 3,500. Additionally, if we look at the action from last week as a possible halfway hesitation, then we have an initial opportunity up in the 3,800 area and some harder to reach potential up in the 4,000 area. Now, so far today, well, we had a reactionary move down below the 50% projected Fibonacci line towards the next Fibonacci support, which is the lesser one at 36.46, and a congestion in the 36.40 zone. Watch this space.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.